Kunal, Naresh, Pashupati, hi, afternoon to all of you. Naresh, let me come to you first. What's the market construct looking like? It's pretty single-handedly led by banks once again.
It continues to rotate. The interesting part is it's not just the ICICI HDFC Bank which had an possible event that is going up. We are seeing a uptick across the large cap as well as the small cap banking names. So we are seeing a breakout happen in the RBL Bank, a City Union Bank. You even have a Federal Bank hit a new all-time high. So the structure is getting positive across the whole banking space. We've hit a new all-time high on the banking index as well. So that's a good structure. So positive on the banking space, and that could drive the markets going forward.
Right. Kunal, what are the stocks that you're betting on right now, other than, of course, HDFC Bank?
No, I think Axis Bank is the other stock which is looking attractive. That's from the large cap private sector banking names. RBL Bank is also something which is now heading towards a breakout. The stock has been trading above the 200-day moving average, but it was just about consolidating. So that's another name which has started to look attractive. City Union Bank is coming out of a major multi-month consolidation about the 169 to 170 mark. And looking at the way the charts have panned out over the last 1 month, a major recovery from those 137, 140 mark. It looks like City Union Bank would also be another name from the mid-cap end which could start to look attractive. Federal Bank has been doing pretty well. The stock is now almost at 180 plus level. So I believe potentially over the next 3 to 6 months, we could be looking at 200 as a target for Federal Bank also.
Okay, so those are some of the banking names that you should have on your radar. But Pashupati, wanted to get a sense from you. This HDFC Bank has been, of course, on a multi-week high. Now, it seems like this time around, it's not going to be a false start, but perhaps something which might continue. Is that the view that you concur with, that HDFC Bank has finally broken out?
So the big challenge with HDFC Bank is its so-called ownership and what is the free float. And I think MSCI has come out with a number which is higher than the current number, so that will attract probably maybe a significant amount of stock to be bought by HDFC. It's showing 54.8% currently versus the index, which is at 55.5. So that gives it headroom, and I think that means that money is going to come in, and that's why it's jumping. It's basically because it's such a large part of the bank nifty, it's pulling the bank nifty up, and all the others are kind of following in sympathy. But I'm glad it's finally happening. I know that the merger is having some teething problems and trying to get take some time, but I think that this MSCI announcement is basically or pending announcement is also good for the stock. The other thing is that the perennial question of they have ADR listed in the US, and that they never consider as part of the free float. So maybe they will, and that will also give a little bit of a bump, because that's a significant part of stock, and that's definitely free float because it can't be owned by anybody from India.
Okay, that's the take coming in on HDFC Bank. In fact, Somit had some, research notes as well as to how much this MSCI inclusion could bring about in terms of inflows. We will, of course, talk about that in just a short while, but it's supposed to be on an average about $3 to $4 billion worth of inflows that you could actually see on HDFC Bank alone. But in the meantime, let's also talk about names like Gujarat Gas, because that has hiked Morbi gas prices by about 2.5 rupees per SCM, which is actually making it more expensive than propane prices as well right now. In fact, Somit is joining in to tell us about how this is going to impact really demand for gas, and how this is actually going to hurt the demand thereby. Can we take it across to Somit? Okay, we will do that in just a short while from now. But in the meantime, let's just bring up the stock price as well of Gujarat Gas, because that, on account of, I think, higher than its 10-day average volumes of about 1 million shares traded, you are seeing quite a bit of drop down come in on Gujarat Gas, which is now lower by almost about 2% as we speak right now. But Kunal, let's just quickly get a status check on Gujarat Gas, IGL, MGL, etc.
So MGL is the strongest chart out of the pack, because I think that stock has, over the last 1 week, has done pretty well for itself, climbing above the levels of, I think, 1700 also, I think, a couple of days back. Today, the stock is, of course, a bit lower, but when you look at the last 2 days of price volume action, it's been very strong for MGL. IGL has also managed to chug along quite well. The stock over the last 1 to 2 weeks has shown a good breakout above the 500 to 520 odd mark. Gujarat Gas is one of the weaker charts now, because the stock has this very odd and a typical tendency of going into a hurried uptrend, but then immediately post the uptrend, the stock gets into a corrective phase and retests the previous swing lows, or at least comes closer to that kind of a point. So I believe with the inconsistency of price trend for Gujarat Gas, I would avoid that name, but I think MGL could be a better pick.
Okay, so that's the take coming in on the city gas distribution names. But Somit is with us to help us understand the implication of that price hike. Somit, take it away.
Well, if you see, Gujarat Gas will remain in focus on the back of the fact that they have increased the gas prices in the Morbi region, which is the industrial cluster, and this region contributes more than 60% of the total volumes for Gujarat Gas. Now here they have increased the prices by around 2.5 rupees per SCM, and post this price hike, if you see, the gas prices are now at a premium of nearly 3.4 rupees as compared to propane. Now this price hike has been done by Gujarat Gas purely to pass on the increase in raw material costs, because if you see the spot LNG prices in the past couple of months have increased from $10 per MMBTU to $13 per MMBTU, and to pass on this increase in prices, they have increased the gas prices in the Morbi region by around 2.5 rupees per SCM. Now because of earlier, given the fact that gas was not as expensive as propane, the Morbi region was seeing more of gas demand. Around 4.5 MSMD of gas demand was coming in from the Morbi region, and propane demand was around 3.3 MMSCMD. But given the fact that now there has been a price hike and now the differential has increased, analysts are expecting that going forward more volumes could shift from gas to propane. So keep an eye out for Gujarat Gas in trade, because though Q1 volumes could be higher, Q2 volumes could come down if more demand shifts towards propane from gas.
Okay, point taken. So price hike, yes, but what the impact on volume in Q2 specifically is something to watch out for. Thanks, Amit, for that. But in the meantime, just taking stock of some more buzzers. In the last 2 minutes, Adani group of stocks have actually perked up. So in Adani Enterprises, Adani Ports, these are a couple of names which are up. And interestingly, India Cements has also seen an uptick. I'm not sure if there is more buying happening from the open market as far as India Cement is concerned, but there's definitely an up move on that stock. Of course, we have mentioned, Gujarat Pipavav, which has been trending higher. But the other interesting news flow that we are tracking right now, and the reason why BHEL has actually spiked in the last few minutes, is the exclusive story that we are picking up from agencies, and some of those lines are running for you at the bottom of the screen, when the Indian government has asked power firms to place orders worth $33 billion of equipment orders this year to build the coal power plants. Companies like BHEL, Thermax, Cummins, these are the usual industrial names that used to get these orders. So these are the companies for which the prospects improve, and that's the reason you saw a sharp uptick on BHEL specifically. Those lines will keep running for you at the bottom of the screen. It's a sizable order win perhaps of $33 billion, and even ancillaries like ABB, Siemens, I'm sure will get part of those orders. So all of these industrial names will be in focus on account of that. Pashupati, what's your view on this entire ecosystem of the power sector? Because one thing is sure, that there's a huge demand supply mismatch happening this year because of the peak demand uptake, and now it seems like that the government is going all guns blazing as far as thermal power capacity is concerned. So what about these companies like BHEL that provide the equipment?
Obviously, I mean, the government is continuing to spend on infra, and part of the infra is power infra, because certain parts of the country are a little bit short. So I think that any power that's coming up, whether it's coal based or it's renewable of some kind, it's all getting a lot of sort of help from the government and SOPs from the government. So I think that obviously any equipment that's going to be, including equipment for storage of power, transmissions, is all going to do well. And you mentioned BHEL, you mentioned some other stocks also. They're all going to benefit from this. The question is, it takes time to build these things, so it's going to take a little bit of time. But since the announcement has been made, it looks like that certainly the Siemens and ABBs of this world are definitely going to get some serious business, and they've actually moved up in the last week, 10 days quietly. So I think that that's another thing that is happening.
Okay, that's quite interesting. In fact, I think, Naresh, if I recall, we've been talking about BHEL, right? About almost 2 months back, that it's a good buy and you do see a sustainable move in the stock. What next after it crossing 300?
So technically, if we look at it for the last, say 3 months, there have been multiple attempts around 318. So that was the top in May. Top in, again in May was around 320. Then on the exit poll day, the stock was at 320. So if it crosses 320, we get into a fresh move. And if we go to a longer term chart also, the stock was last at 300, 320 back in 2010. And 2007 highs are around closer to 400. So for now, till the time it holds up about 290, which is the recent swing low, the upside remains a possibility that it will eventually break 320. So one can be a preemptive buyer with a stop loss at 290.
So those are some of the stocks that one needs to watch out for. Real estate pack has also seen quite a bit of an uptick, of course, last year and this year as well. And there's a sustained momentum with respect to demand, both in terms of the luxury segment as well as the higher premium kind of segment as well. Pashupati, I want your view regarding real estate pack, but before that, let me take it across to the conversation my colleague Snehi had with the management of Brookfield REIT.
I think we are very optimistic about the future of commercial real estate. We are seeing very good tailwinds, as you are seeing in the numbers. There are record leasings happening this year. The GCC trend that many people have spoken about, there are many reports which say that the GCCs in the country will go up to maybe 2,400. I think all of that will create a lot of commercial real estate demand. What we say is, we believe India will truly be the office of the world, and it is not just about the back office processes, but a lot of knowledge work is moving here. So all in all, looking at all of that, we are very excited about the potential of commercial real estate.
All right, and where do you think, when it comes to the real estate cycle, where do you think India is currently placed? Do you think that this upswing that we've seen recently, do you think that is sustainable going ahead? Are you seeing more legs to the rally, or are you seeing or penciling in some kind of slowdown coming over here?
Yeah, so I think all the factors which are driving that continue to sustain. There is a demographic advantage that the country has, which is driving all of this. There is a lot of demand in terms of the economic outlook. We know that, in the backdrop of global uncertainty, India is really the shining star, and a lot of the macro factors remain. So I think we continue to be, like I said, very optimistic about the real estate cycle.
In fact, staying with our view on real estate demand will remain strong. That's also the word coming in from the former CEO and VC of HDFC, KK Mistry.
Sector is going to grow not just in residential housing but also in commercial housing, and India has really become the back office of the world. So you'll see more data centers getting created, you'll see more REITs getting created. Today there are 4 listed REITs and they've been extremely successful, and I think it's only a matter of time before we see more developers putting their properties in REITs. So you will see potential continuous strong demand for real estate in the country.
Okay, so and a quick couple of views on what the expectation is from the real estate and the infra sector from the upcoming union budget.
Well, I think the focus will be on affordable housing, in my opinion, and there will be some, in my opinion, some scheme or the other that will come up for the affordable housing segment. If you remember, in the olden days, I think it was in 2016 or 15 or 16, the government had this scheme of the CLSS scheme, Credit Linked Subsidy Scheme, where if you were a first-time home buyer and you were buying a property of up to a certain size, then you were entitled to some amount of concession or subsidy from the government. And I think something like that, whether it is in the form of a subsidy or not, I don't know, but something of that sort will come for the real estate sector to encourage the lower income people to be able to buy a house.
Back with closing trades right here in ET now. The closing trades are looking quite okay in trade right now. Of course, there are a lot of individual buzzers we've been talking about as to how PFC, REC are holding out well. There's Tata Consumer, which is also looking very, very smart. And then, of course, there are names like IREDA. It's, I think, clocked up about almost 500% from its listing price. That's IREDA in trade for you at the day's highs, currently higher by about 9%. In fact, just earlier this week, we did speak with the management as well, Mr. Das, and here's what he had to tell us about the long-term visibility of the company.
We are expecting that probably now that is in advanced stage and they will take a final call on this. Along with us, also I came to know Utco had also submitted their request. If we get, so in addition to PFC, REC will be another 2 agencies. So we can go to market and we can raise from the market, assuming it is 5.25 or even 5.5. Today we are raising from the market at 7.5, 7.4, something like that. Because 1 week back we raised around 1,500 crore for 10 years and it was 7.42. So against that, if it is 5.2, so almost 150 to 200 bips difference will be there. And if we pass on that to the sector, remember one thing, the new and emerging sector, the challenges are more. So when challenges are more, we load that risk factor to the interest. So many projects which are not becoming bankable today because of that loading, if we have a cheaper source of borrowing, then that much can be passed on to the sector, and the project which are not becoming bankable today, those will become bankable. And that will further speed up this 500 gigawatt target in the country.
That stock high by almost 8 to 9% right now. But the other financial names which are actually perking up, Pashupati, are also the likes of Bandhan Bank, Federal Bank, even RBL Bank for matter. We did speak about HDFC Bank, but if I had to ask your view regarding some of these mid-tier banking names, whether a Federal, a RBL, a Bandhan, yes, etc., and the kind of updates that we've got in Q1 as well, anything that seems like a good structural bet to you?
Well, I think if you like the sector, you buy them all because they're all doing pretty well and they're all sort of delivering. I personally am not so wild about the sector, but I'm happy that HDFC Bank has made some headroom, so people will come to that. It's a flight to quality, if you want to call it. And I guess on the back of that, Kotak has also gone up a little bit today. So I don't think you really need to go to the next year because the first year still has some upside. That's my personal thought.
That top quality itself is providing you upside. Why go to the second round? But Kunal, any differentiated view here? Because Bandhan, Federal, RBL all showing quite a bit of price volume action today.
Yeah, so now what could probably happen is that the momentum could come back into the mid-cap names. So if someone is looking at, say, Alpha and looking at a higher returns in a short span of time, then maybe Bandhan Bank, RBL Bank, even Federal Bank to a larger extent, City Union Bank, these stocks can provide that high degree of returns. But then I think the high degree of safety could also be on the large cap private sector banking side. So I would probably believe the likes of HDFC Bank, Axis Bank to a larger extent, ICICI Bank, these stocks have done reasonably well for themselves. When you look at this from the last 1 month or 2 month price lows, where these stocks were and currently where these stocks are placed right now. So I believe in that context, one has to try and take, in terms of individual view, whether someone is looking at a short-term trade, then maybe a Bandhan Bank, RBL Bank and Federal Bank would be a better bet. But if someone is looking at a delivery-based buying and with a time frame of 6 months, 1 year plus, then I believe large cap banking names is where one should be.
Okay, that's the take coming in on some of the banking names. But Naresh, on the subject of Reliance, because, while it has been doing a lot of the heavy lifting, it's not really been all that consistent. I mean, today I was looking at the prices and it's down about almost 1.25%. What do you read on the charts for Reliance at 3,100, 3,090 thereabouts?
So the stock spiked up from 2,900 to almost 3,150 in 3-4 sessions. And now is going to the retest of that breakout around 3,020, 3,060 mark. So closer to 3,060, 80, you want to actually be buying into the stock and expecting eventually the stock makes another move and goes towards 3,300, 3,400. So it's a buy on dips. So closer to 3,060 is where you want to buy, keep a stop loss below 3,000 and expect that the trend takes it further higher. The last range for the stock was almost for 5-6 months around that 2,800 to 3,020 mark. So such a breakout ideally should see one more leg in the short term. So it's a buy on dip going forward.
Okay, a buy on dip. That's the call coming in on Reliance. But Pashupati, great to have you on the show. Thanks as always for taking the time out and joining in. Let's get in some closing trades as well on that note. Kunal, what's your list like?
So I'll go with JSW Steel. In fact, many of the metal stocks, large cap names specifically, are heading towards a breakout. JSW Steel has confirmed a breakout about the 930 levels. Looks attractive from a BTST as well as a short-term swing trade.
Right. Naresh, what about your ideas?
So that would be a buy on City Union Bank. The stock has broken out above the highs made in last in December 23, where it had started a gap down and went all the way down to 125. And it's also almost a 1.5 year high and is still available back to the 2019 prices. So could be a big catch up going forward. So expecting it to go eventually towards 190, 200.
Okay, that's a call coming in on City Union Bank. We're going to take a very quick break on that note. But as we do that, with markets now sustaining record high levels, investor optimism will continue to rise. That's the word coming in from HDFC AMC MD Navneet Munot. Let's hear out an exclusive chat he had with ET Now.
Markets are at a new high. It's definitely a cause of celebration. It reflects India's macroeconomic fundamentals. It reflects that India has got political stability, macroeconomic stability, financial stability. There's tremendous faith on the government's policy continuity.
You spoke about policy continuity, and we have the budget around the corner. What's your budget wish list looking like? Any demands that you have from the finance minister this time around?
No, I think the Prime Minister has already spoken. We have heard Finance Minister and all the other policymakers. There is continuity. Everybody has tremendous faith that the path towards structural reform will continue, path towards fiscal prudence will continue, path towards getting greater participation of larger number of investors in the capital markets, that will continue. And the tremendous focus on the infrastructure that government has got over the last several years on digital infrastructure, physical infrastructure, social infrastructure, that will continue. So India is poised to become a developed country, and we are all looking forward to be a participant in this journey.
If you like this video, then like, share and subscribe to ET Now.